What's going on, guys? My name is D. Anthony with Evolution Traders. In this video, we're going to talk about options trading. So a lot of my videos are focused around the futures market because it's just so hot, so popular with all of the prop firms. But again, let's get back to my roots, right? I'm an options trader. About 80% of my net income for the total, for each and every single total month comes from options trading. And I use prop firms as a secondary source of income. With that being said, we're going to go over a couple strategies that are very, very similar to the way that I trade futures, because obviously I got those strategies from the way I trade options. So always when I'm looking at stocks, I'm always kind of looking at previous day low, previous day high. Okay. I'm always looking at that first hour candle range, and then I'm looking for 20 plays in between. Okay. So there's three different components that are going into this. And if I zoom out a little bit, we're looking at a 5-minute time frame, but if I zoom out a little bit, this first dotted line that you see up here is yesterday's lows, okay? So automatically, just based on the daily chart, based on yesterday's lows, if Tesla was to lose yesterday's lows, we have a very good potential to move lower, right? So remember, stocks can move down, but they can't move lower until they take out a previous day high or low, or previous day low. They can't move higher until they take out a previous day high. The stocks can go up, but it doesn't mean that they're moving higher, if you guys are catching my drift. So with that being said, I'm always looking at those key levels of previous days lows and highs, okay? Then the second dotted line that you're looking at is the opening range on the hourly chart, the first hour opening range lows. Now I don't have marked out previous day high or the first hour highs, because we're trading at the bottom of the channel, right? We would still need to have taken out the pre-market highs, and then from there, maybe I would have been interested in a little bit of a long position on Tesla. But what we're looking at here is once we broke through yesterday's lows, right? You can see it here right off the bell, 6:35 a.m. We broke through yesterday's lows, confirmed, went down all the way to around $170 from 171.37. This was an area of opportunity where you could have taken a little bit of a scalp play there. Now, again, if you're looking for, a reason to take profit, or what would be your take profit, if you look at the 5-minute time frame and you look at the ATR was sitting at around 40 cents. So for me personally, if I can get 40 cents, if I can get 80 cents, if I can get $1 out of this thing, I'm going to be in and out. Okay. I'm more so of a scalper. I play same week expirations. My contract strike prices are always at the money or in the money. Okay. So for example, if the price that I'm looking to get at is $171.37, I'm going to choose the strike price that's closest to, or in the money closest to, this $171, if that makes sense. Okay. My typical hold trade times are less than an hour. Okay. There'll be very rare instances where, let's say for example, I take 10 contracts, I hit my price target, I sell out of 80% of those contracts, and I hold 2. Sometimes I end up holding those into overnight, right? Because again, it's a stress-free, risk-free trade. So in this particular situation, I did play Tesla to the downside. Now I was trading futures off the open, so I missed the original breakdown of previous day low. Okay. So when I already have missed this breakdown, what I have to see now is some type of consolidation, some type of bounce. And I need to see a loss of that first hour range. So again, for some of you guys who are trading options for the first time, or even guys who are trading futures, if you guys find it difficult because of the volatility, the first 30 minutes of the market, right when the market opens, to catch these trades because the ranges are so big, you guys can essentially trade these opening range breaks of the first hour candle. If we confirm at the top of the hour after the market opens, take your stab at the trade. Okay. So in this particular situation, we lost yesterday's lows. We put in that new low, then we bounced. Perfect. That's exactly what you want to see. Once we bounced all the way into this 20 SMA. It did set up a 20 SMA long setup. However, I've got a 200 here and I've got pre-market highs here after a flush. I'm not looking to go long on a dead cat bounce at the top of the range. Okay. It's just not going to happen. I would need to see first hour highs be taken out and pre-market highs be taken out before I'm interested in that long. It gets rejected, sets up a 20 SMA play short. Now I don't take the short because if this was just a back test, right? If this is just a back test into this first hour lows, or even yesterday's lows, if this is just a back test into yesterday's lows or the low of day, then I was going to run the risk of getting stopped out, right? If we just pull back a little bit and then start to push higher. So what I wanted to see here was this opening range get broken. We put in that low. We did a little bit of a dead cat bounce. We've already taken out previous day's lows. We've already set a new low of day. I want to see this get broken. As soon as 170 gets broken, I take my normal size 10 contracts, get in, look at the ATR. ATR is sitting at around 71, 75 cents at this particular time. So automatically, I'm thinking if Tesla starts to push up 70 cents, 80 cents, $1, right? From my entry, I'm going to start to take those profits. Being that I'm buying puts, which means that I'm shorting the stock, I'm looking for the stock to move down 70 cents, 75 cents, $1, right? And if you look at this 5-minute candle that breaks through this first hour opening range, it breaks down from 170 and goes all the way down to 169.11. So almost 80 cents here. So as soon as it starts to go down 70 cents, 80 cents, I sell half my position. And the reason why I'm going to sell half that position is because I want to make sure that I'm locking in gains. Okay. That way, when I hold these runners, it can become stress-free. You know, use a break-even stop, use a, something that's not going to allow you to give back all of the gains that you just locked in as your stop loss, right? Notice how we start to trickle around here for 5, 10, 15 minutes and then put in a new low. Now, I sold the rest of my positions here when we broke this low here and put in a new low. That's just the way that I sell my runners. If I'm going to take profits here and it's going to consolidate or bounce, each time we take a new low, I'll continue to take off those runners. Now, depending on how many contracts I'm leaving left, it's going to depend on how many pushes down that I'm going to be able to tax, right? So again, in this particular situation, I started with 10 contracts, quickly sold 8, and then I had 2 running contracts. And when we put in a new low, I just sold out of the last 2 contracts. It was a good little trade, quick trade, and it's something that I look for on a day in and day out basis. This is something that I use on the future side of things as well. I look for these particular setups as well. So again, I hope this video finds you well. I hope you guys had a fantastic trading week, and I hope you guys subscribe to the channel. Make sure to like, comment, and all of that good stuff. And I'll see all of you guys in the next video.